Hey everyone, Dan Dog Crypto. I'm back. As we can see, the crypto markets have been active. Money's been flowing in or has been sitting on the sidelines. But we've had some interesting situation with the banking flaw, and it certainly started off with Silicon Valley Bank and then USDC. But the flaw with the banking crisis, certainly with the bank run, and as they were stating, the tweets or social media, and these are ordinary, common individuals, but what really triggered the bank run has to be large institution accredited investors that have large positions at stake, and they created a panic similar to a 1907 bank run. And this bank run certainly created the fear, and when banks or the collateralized, COVID really created this massive money printing, and governments throughout the world printed more money, and this money had to flow into these banks or these institutions. And certainly the most safest in theory would be treasury or treasury bonds or gilt bonds, that is government bonds, but the yield that they were receiving. So when you have 100% collateralized within a bank, and what most people just believe that these banks and your money that is in an account, it really is an IOU. So the bank really truly has ownership. But what the fear has presented now is that Silicon Valley Bank, and we have the Federal Reserve and the program that was implemented, that certainly Silicon Valley Bank, the depositors were made whole. But who were the depositors? Large players. So these large players were made whole and did not lose any of their funds. So certain banks, as they went under, as we had, or were backstopped. So in essence, the Federal Reserve raising its rate has put pressure where it's dramatically raised the rate in such a short period of time. So you're going to see these fractures within the banking system and the fear. So what they're doing is actually creating a slow bleed for the banks. But here's where it started, and you have the Janet Yellen now coming out, and not all banks are safe over 250,000. But what is the threat? The threat ends up being that the community banks that work within each community, that fund small businesses, that create an economic opportunity for the common man. But what is really happening now, the Federal Reserve is attacking the system. And by doing so, you get more centralization. So yes, they have backstopped it, but people are leaving the system. Well, because community banks, there has been a pressure on them. But the pressure truly comes technology, the advancements in technology, which ends up being cryptocurrency and certainly blockchain, where blockchain totally changes the fundamentals of the whole industry. But the fear certainly is that cryptocurrency and the disrupting of the banking system. So we have Bitcoin that becomes a store of value or a perceived store of value. but it's disrupting the banking system, and now the attack ends up being directly for your community banks, creating more centralization because of the point of failure. But blockchain technology and Bitcoin solves this. What's happened now in the financials is because of this technology, it totally disrupts everything. So your local banks trying to compete with your larger banks. Just a bank is a business that operates for profit, straight up simple. And if it does not generate profits, it has the possibility to go under. Other than, yes, your funds are insured up to that 250, but it is a business and it's operating for profit. And what happens now, cryptocurrency, blockchain technology is disrupting everything because it can be established in a decentralized ledger that within a centralized ledger that is the banking system. It can settle so many things. It could create settlement systems, funding. It's more secure because it's taking it and it's decentralizing it within its blockchain. So the banking system or the Federal Reserve is raising these rates, putting pressure on these banks, but these banks are competing for a piece of, which is the profit. But because technology is evolving and these banks now, they have pressure, and naturally it's creating a slow bank run. And yes, they backstop it, but what is really happening here? Because of this technology, it's changing everything. But what happens here is really the competition ends up being the digital asset space because it does so much. As a payment system, you can move trillions of dollars outside of a banking system in a decentralized way. Ethereum certainly is a public blockchain, but it cuts the need for those third-party intermediaries. But this makes it borderless. But what happens is, again, is control, is trying to control the flow, and now creating the fear within the banks and creating these bank runs or taking over these banks is because of the pressure that this technology presents. And as we analyze and we see, it's improving everything. And this is the future. It's the now, but it's who controls the on and off ramps. But now what's happened is the Federal Reserve was, we'll say, designed to control the flow of an economy. So it has the ability to monitor and analyze everything. So it controls and contracts liquidity. So yes, they've backstopped these banks, but they're controlling this liquidity. But now what's happened is with the Federal Reserve launching their payment system or their services, they're entering now the game of banking, where you had community banks and local banks because of technology. But now you have the Federal Reserve that controls the flow of an economy, now entering directly where banks and local banks and credit unions flowed and created money, but also created an economy within smaller communities. But now that is under pressure. So really it's attacking again the common man, the common person, because now they're entering the game. So it's no different whatever game you play. If you're playing soccer and the ref enters the game, and all of a sudden he can make whatever decisions and penalize everyone and take control, who's going to win? Well, this is what the Federal Reserve is doing with the CBDC and the payment system. And that's why we have to be very careful on what really happens as they move forward. But the pressure is technology, and certainly cryptocurrency has this ability, and that's why we're seeing such a flow of money coming into your Bitcoin, your Ethereums, your larger cap coins. And even with hacks, when we've seen hacks move, which I believe hacks mining is a better store of value, but money is flowing into cryptocurrency because the uncertainty in these economic times. So being in cryptocurrency or digital asset space, there are opportunities, but which ones do you head in? So there's certainly going to be ones that outperform others, and as we've seen, hacks certainly has done very well and has had a nice run. But what is happening with hacks? Well, hacks with the blockchain PulseChain that is launching, and so its final phases, the V3 is up and running, but now this creates a layer 1 solution, which you have the PulseChain, which is its own chain, which is a copy of Ethereum, and then you have PulseX, which is really a Uniswap. So now money is flowed in here because you actually store the value of money in hacks. So now it becomes an alternative to a banking system. So hacks has done very well, but also when I look at, and I've been stressing PulseZen because of the early opportunity with PulseZen being an economic economy. But when we look at PulseZen, the possibilities of what it can do based on its economics, and as we search, and we've seen it's had a high of 1 cent, but right now at this present time it's at 0.0047, but we've had distribution. So PulseZen is a fair economic economy. It's an anti-whale function that is designed to create a fair distribution for all. But at this present time, it's an accumulation that is occurring. And we've had its high of 1 cent. That is still early based on its economics and the possibilities of what can happen with PZEN, because the amount of holders that are in the Zenites, which we have approximately 2,400 holders of PZEN, which is early. And anytime you enter into a protocol early, it creates your best opportunities. But when we look at the holders of PulseZen, which have been accumulating, but it's, as we see, as we work through it, it's not a large whale dominant ecosystem, but at any point, any of these wallets may take distribution. But the key thing is understanding a network effect as it occurs and what potentially could happen as more people understand what a wealth redistribution system is and what PulseZen is. My main intentions of supporting certainly PulseChain is when I looked at it and understood certainly is not a scam, and it got compared to another protocol which was certainly not true. And analyzing and knowing that early opportunities always create the most economic benefits, but also knowing that when you can create a yield, a continuous compounding yield, but in these uncertain economic times, having money in a bank and leaving it, your money, it's an IOU, and the pressure that's put, the flaws that are there within the banking system, the smaller local banks that potentially, yeah, there's a backstop, but there's a time lock. Can they survive? Do they continue? What's the terminal rate so that they go to 5.25? So this is going to put more and more pressure. But the real truth is cryptocurrency disrupting the banking system. We have decentralization, true decentralization interacting, and this technology disrupts everything. But now you have the Federal Reserve that's coming in and creating a system for banks, but also the pressures on these smaller banks with raising rates. You can easily move your money and put it in a money market account. So now there's pressure there. So now profitability. A bank is designed to generate a profit. Like any other disruptive technology, we've seen the brick and mortars when the internet emerged, and the .com era, and the online shopping, disruptive. This technology disrupts the financial system, and they're aware of it. So PZEN is a economic economy, but what it really represents, it is a financial asset because code allows this to occur. So you have the code that creates a redistribution of 2%, which is a target. So 2% gets redistributed to the holders. It goes into a pool. Well, what happens here is we have a max supply, which was 880 million. That's where it started. But PulseChain was an organic launch. It launched and the redistribution launch. So it starts organically. So there's no pre-sale, no ICO. So as it launches, anyone who enters it into PulseChain, it's happening organic. There's no tiers. As time goes on, as they elevate the price, and then there's also that anti-whale function, so no one dominant wallet can control the ecosystem, which creates a fair economic distribution, an equitable distribution. So now the key thing with PZEN, regardless, is a deflationary environment from the get-go. So now that 0.01% is eliminated on a buy, sell, or transfer. So now the payout cycle is per transaction. So each transaction on a buy or a sell, if someone takes a distribution of profit, that transaction cycle, the volume of that cycle, there's a redistribution, a compounding redistribution payout. But this is it has to be analyzed on an annual growth rate, how many frequencies. But PulseChain is early. So this burn that occurs over time will naturally create an economic push for the upside. Then you have the charity wallet, which is designed that is 0.2% of that pool amount goes into the charity wallet that the DAO, the holders, will vote on. So now, as time goes on with PulseChain, can PulseChain reach 2 cents, 3 cents, 4 cents, and the 5 cents, 6, it's designed to do a 10,000x. But you have to understand what really happens. So you have this burn off of each interaction. But the magic ends up being, as we start and we analyze within its holders. So you have these holders right here, which is only 2,400 holders. Those are the Zenites. And what happens is, what is the pool size? When we analyze the pool size, that ends up being a key factor. What is the possibilities? And what economic mass is needed to move PZEN in an upward direction because of the limited supply of PulseChain, which ends up being huge when you analyze PZEN. Let me track this here. And we look at it. There it is. So right now there's 53 million PZEN. It's at 0.004 So now there's 2,300 holders of PulseChain. So now when we look at it and we analyze what has actually happened with PulseChain. So from when I started, the pool size, or the economics, Newton's law, the force. So we've taken two distributions, which are still minor. Today's the 26th. Let's analyze this wallet. And when we look at it, so there was a distribution that was taken. So when you look on this distribution and we analyze the wallet, so now again, let's see what's happened. So they don't have any more PulseChain on this distribution. So sometimes patience is what's needed, and that's what I found has always been key with cryptocurrency, the timing. So now they're pretty much out of their PulseChain. So they took a distribution. Again, what's the reason? Everyone has personal reasons, but most people get impatient. They want to enter. They want the pump. They want to get to the point, the promised land overnight. And what happens is they keep searching and they're rolling and running into all these currencies, trying to find the next Shiba, or and they are there, but time. Shiba was time. People entered in and out and got out early. Pulse Doge was another one. Not Pulse Doge. Doge was another one that if you entered and held, you would have done very well. And of course, with Hex, you would have done very well. But there's been so many. As money flows into the ecosystem, and who dominates that ecosystem is key, because the dominant player in the ecosystem can control the actual flow of this whole economics. They can sell down the price, they can push up the price, depending what their decisions are and how much economic mass there is. But PulseChain, because it's not controlled by a large whale wallets, as we see. So now what happens is at any point, what does it really take to move PulseChain up economically? Remember, as I state, wealth is not scarce, but also people are intelligent. And some people enter and it takes time and they're looking for the quick hit. And what you do is you analyze and see the distribution and how this distribution is in. And is a network growing? Is a community growing? And that ends up being an important aspect as you analyze everything. And some people don't understand the importance of building a network effect. So anyone that understands how important a network and what cryptocurrency can do, because cryptocurrency is the highest appreciating asset class. Why? Because network effects and communities are the analysts and are the recommenders of the cryptocurrency. And what happens, it's not to just benefit one, it's to benefit all. But if some just think it's going to just pump and they're just going to sell on someone else's head, it doesn't work that way. Certainly with PulseChain, because it's a wealth redistribution economy. And if you understand keeping your principal in so you continually receive rewards, but understanding what time does. People search for opportunities, but do not reach and embrace them right where they are. And they keep searching and they miss them. Or they sell too quickly and wish, oh, I wish I had it. Because what? They get impatient and the psychology of a market. But if anyone understands what Metcalfe's law is, and a community growing and building together, united, in this case they're the Zenites, and understanding mass with force, what the possibilities are. We analyze whales. Those are large dominant whale wallets that have lots of money. But you may think you're a whale and then someone is even stronger than you. Well, in this ecosystem, it's not dominant. But so can you imagine the force to the upside? But the key is building the community because it creates opportunities, not just a pump. This is a fair redistribution economy. It's a fair compounding system. The EVM identifies your asset, which is an income-producing asset, which is held in your decentralized wallet. So you hold it. You don't even need to look at the price. The key is share it because of the crisis that is happening within the banking system. You do not hold and own your money in a bank. A bank is for profit, and if it cannot meet those requirements, it can go under, and the only savior is the Fed with the insurance of $250, but that too becomes a problem when you have to file it. But they're creating this. So you want to be in cryptocurrency, digital asset space that gives you the independence, the freedom to move money, and you can transfer it into any, if it's US, any country, any jurisdiction, as long as you comply. But you hold your asset in a decentralized wallet and you have ownership of it. This is what you educate. That's how important it is. PulseChain certainly is an opportunity. I have mentioned Hex. That was an opportunity at 2 cents. People called it a scam. They still call it, but you see what's happening. Conrad Zen, the advocate for also PulseChain. But each and every Zenite is an advocate. And any potential Zenite is an advocate. Any Hexican can become an advocate. We all working together because we're entering into PulseChain. We can keep the flow within the PulseChain economy, supporting one another. That's how important this is, because PulseChain, freedom to travel, freedom to move, freedom of speech. That's why the sacrifice was, because of what is happening in these economic times. And if we do it correctly, all will benefit. Wish you the best. Talk to you soon.